Hi, this is James Stokes at Westpac with the end of day report for Thursday, September the 13th. All eyes were on the Federal Reserve, who today announced further stimulus. They're going to spend $40 billion a month on mortgage-backed securities, while at the same time maintaining Operation Twist until the end of the year. That's where they are buying longer dated treasuries and selling shorter dated securities. They're also going to, they've also extended their low or zero rates conditional commitment from the end of 2014 to the middle of 2015, and also said that if there's no or not enough improvement in the labour market, they will put in place further measures. I'll give the exact quote. If the outlook for the labour market does not improve substantially, the committee will continue its purchases of agency mortgage-backed securities, undertake additional asset purchases, and employ its other policy tools as appropriate until such improvement is achieved in the context of price stability. So very much at the upper end of the range of expectations in terms of what the Fed's done today. I've got to say, we've been arguing at Westpac for QE3, a further round of quantitative easing, since they announced QE2 back in October 2010, because we didn't think that would be enough. And the Fed is basically arguing that high unemployment really needs further policy response. They didn't say it, but the fiscal risks, particularly in 2013, because of Congress's inability to put in place any agreement on spending and tax measures, and also the risks from Europe, made the case even stronger for the stimulus they've announced today. Markets have loved it. The Dow is currently up 1.3%. That's a 174-point gain. It's at 13,507. And although European markets closed ahead of the announcement, the likelihood is they'll respond positively tomorrow. Actually, European markets mixed. The London market up 2/3%, but the French market down 1.2%. The Germans off 0.5%, and Italy and Spain off, around 1% or so. In Europe, a bit of a negative reaction to the merger proposed between British Aerospace and EADS. We had Next report disappointing retail results in the UK. And on the data front, nothing much in Europe, but we had US producer prices, which jumped very sharply. Gasoline and food were the main drivers of that, not unexpected. But also the weekly unemployment insurance figures showed a 15,000 rise to 382,000, suggesting that the pace of layoffs has actually increased somewhat. That's the highest outcome for a couple of months, excluding a one-off figure in July, which was related to a distortion in the way the figures are calculated. So that's really it. Commodity markets have benefited from the Fed action. Just to give you some prices there, the gold price is up 2%. It was about flat actually, or down slightly before the Fed decision. Oil prices are up 2/3% or 3/4% now actually. So gold's at $1,771 an ounce. Oil's at $97.75 a barrel. Copper, we're looking at a 1.4% gain there too. The Aussie dollar's loved it. It's at 1.055 against the US dollar. Its low today, around the time of the Fed decision, was 1.043, so up more than 1 cent. Ben Bernanke is speaking now at his press conference. Something may emerge from that, but I wanted to get this report done, so you may need to check the web to see if he's said anything additional. But really a pretty full-on policy response from the Fed. We've got the ECB potentially embarking on its version of quantitative easing, and there's talk of policy stimulus out of China coming too. Bank of England, of course, is already engaged in a further round of quantitative easing, so it's all systems go for policy stimulus, it seems, in many parts of the world. All right, that's it for today. I'll be back again with a end of the week report for tomorrow.